This week, we're looking at the good, the bad, and the ugly as we begin our journey into the second half of 2023. So stay tuned. Welcome to another local market update with Rick Batista. Welcome to another weekly market update. Is the housing market heating up with the season? We're going to find out. I can tell you I wish we had as much inventory as we do street festivals throughout Chicago, but we'll be covering new inventory in this video too. You know, with so many things going on with the economy right now, as well as in and around housing, I'm committed to bringing you weekly market updates because monthly just doesn't cut it. Before we get started, I want to let you know that this video discusses both national and local data. The local data we'll be sharing in just a bit is for Chicago proper, the 77 areas, and although we do service all of Chicagoan, including the Burbs, later in this video we're only going to dive into the city's data. So let's get started with a fun fact, and we'll share some other info and insights with you before covering the city's numbers. Fun facts, market time! Buyers everywhere are feeling the crunch when home shopping this year, but middle-income households, those earning up to $75,000 per year, are perhaps experiencing the strongest competition overall due to a shortage of homes in their price range. The National Association of Realtors reports the market is currently short approximately 320,000 listings priced up to $256,000, which is considered the affordability range for middle-income buyers. As a result, these buyers can afford to purchase just 23% of all listings nationwide, a stark contrast to just 5 years earlier when the same group could afford half of all the homes on the market. That is a huge difference, and I think overall, all the resources and organizations out there that can do something about it definitely need to start doing something about that, because the American dream should absolutely 100% be as attainable as possible for as many households as possible. That's just a fact. That's what makes this country great. But jumping right into the rest of our update, where is housing mid-year? Let's talk about it. What's the good news? Housing is normalizing after 2 years of wackiness. Return of seasonality is a welcome sign, and prices are rebounding. Reality check for us. Homeowners have limited options, as we just touched on, between rates and inventory. New listings are still declining, and affordability remains the primary challenge. But we have an outlook. With that said, what's our outlook? Well, new construction is growing, offering more options for buyers and sellers. We certainly need more affordable housing in Chicago and Illinois, and we'll cover that in just a bit. And we expect a moderately active summer season. Unpacking all of that, a lot more. We're seeing buyer demand returning, which is a good thing overall. It can certainly be challenging with the limited inventory, but for those sellers who've had their homes and properties sitting on the market, maybe it's time to change your marketing strategy and or pricing to attract these buyers hitting the market. In this survey conducted by Freddie Mac during May 11th through the 20th of this year, 18% say they are likely to buy a home in the next 6 months. On the flip side, 16% of homeowners say they are likely to sell in the next 6 months. Perhaps with more buyers entering the market, more sellers would consider that it is the right time for them to sell, helping to alleviate the pressure that so many regions are facing. Low inventory. You're gonna hear that as a common theme, folks. And what's behind this mental shift? Well, we're accepting the new norm, which is mortgage rates being in the 6 to 7% range. According to Freddie Mac, looking here at the weekly averages going back to October 2022, as recently as June 29th, we'll be looking at 6.71% for 30-year fixed rate mortgage. And you can see the ups and downs since October, but certainly staying fairly stable for the last 9 months. And with stability comes activity. Why? Great question. Thanks for asking. Because people just like yourself prefer to make decisions during stable times. Slow and steady wins the race, right? In fact, Lawrence Yoon, chief economist for the National Association of Realtors, said this: mortgage rates heavily influence the direction of home sales. Relatively steady rates have led to several consecutive months of consistent home sales. That's a tongue twister. Speaking of steady, existing home sales have shown signs of steadiness recently. Looking at this chart from the National Association of Realtors going back to January 2013, the average from 2014 to 19 has been 5.3 million, certainly more than during the pandemic years, but May 2023 saw 4.3 million, which was an increase of 0.2% month over month. And although we're less than February and March of this year, we were right in line with April's numbers. And this is a super interesting chart from the National Association of Realtors. What price point has seen the most movement? 250 to 500K range. 45% of the sales have been within this bracket, heads and shoulders above the others. Why, you ask? You're asking excellent questions today. Because with the new norm of mortgage rates in the 6 to 7% range, buyers realize they can buy something now, refinance later, and or build equity in their now home to make a move in a few years. We've covered demand. Now let's talk about supply, which has been improving but certainly remains limited. Realtor.com points out that there were 7.1% more homes for sale in June compared to the same time in 2022. This means there were 41,000 more homes available to buy on a typical day this past month compared to 1 year ago. However, the inventory growth rate for homes actively for sale continues to slow the fourth month in a row. This chart, also from Realtor.com, is looking at active listing counts since 2017. And it shows that things are improving. We're certainly above the months of May in both 2021 and 22. Numbers rising month after January of this year. Now, if we break things down by region, according to Realtor.com, looking at the number of homes for sale in June 2023, this chart here demonstrates that monthly active listing counts versus last year in pre-pandemic 2017 to 19 years. The Southwest and here in the Midwest is in the positive compared to last year, and quite a bit less compared to the more normal years of 2017 and 19, and quite a bit less compared to the more normal years of 2017 to 19. The Northeast struggling even compared to last year's numbers. Realtor.com went on to note, in the final week of June, we noted that inventory actually declined on a year-over-year basis for the first time since last April. This substantial slowdown was primarily driven by fewer potential sellers opting to list their home in the market, which lapped the period of higher inventory growth that started in May of last year. Taking a look at this next chart going back to the start of 2022, active listings have been less than new listings for 13 consecutive months. We need more inventory, folks. Whether it's existing homes that are priced accordingly and practically due to their current state, and or new construction. Yes, I'm talking to you, builders and developers out there. Another quote about inventory from Realtor.com. In June, the number of homes newly listed for sale declined by 25.7% compared to the same time last year. New listings remained 27.6% below pre-pandemic 2017 to 19 levels. In fact, the pace of new home listings year to date is even 16.4% lower than in the first half of 2020, when the real estate market was still contending with pandemic-era closures, restrictions, and uncertainties, highlighting just how short the new options buyers in today's market really are. This chart from Realtor.com shows two things. One, signs that there is a return of seasonality to the market, and two, need more inventory. New listings are now below previous years. In June, we saw new monthly listing counts across the country at 396,082, 25.7% less year over year. In fact, looking at the top 200 metros, new listings were down in 99% of them across the country. To better understand why with higher mortgage rates we're not seeing prices decline, Mark Fleming, chief economist at First American, stated, "History has shown that higher rates may take the steam out of rising prices, but it doesn't cause them to collapse entirely. This is especially true in today's housing market, where the demand for homes continues to outpace supply, keeping the pressure on house prices." So the big questions for many today: do I buy now while prices are still stable and before they go up? Do I buy later when mortgage rates go down? If I sell now, where do I move to where I can afford what I need? Do I really need to sell now and lock into a higher rate than I have because I refinanced at a rock bottom rate a couple of years ago? Then there's the pool of renters wondering if it makes sense to buy or continue paying for someone else's mortgage or retirement. Whatever your situation, whatever move you're looking to make, I'm here to provide you with info, data, insight, and words of wisdom so that you can make the most informed decisions, you and your household, based on your needs, wants, and goals, both short and long term. Moving right along to new construction, although it may not be happening in your neck of the woods, overall there's a rise in new construction, which is offering more options for active and prospective buyers. We're going to be looking at both new residential starts and completions because those numbers may not always match up for various reasons. Note that starts would essentially signify that the foundation has been poured. This chart from the census goes back to January 2000. It's measured in thousands of units and the annual rates are seasonally adjusted. Residential starts jumped by 22% in May to 1.6 million. They are certainly less than the years from 2000 to 2007, where we saw an average of 1.7 million. Higher than the decades covered by 1960 to 99, the average was 1.5 million. Considerably higher than the recovery period of 2008 to 14 that saw 766,000. What's being built? It's a mix of single family and multi-unit or multi-family homes. So if you need a place of your own or looking to have some tenants help pay your mortgage, or you're looking to start or build your investment portfolio, number one, we can certainly help. And number two, options are starting to be built. Who's the leader of the pack? Just like we touched on in our last market update, the South. There's far more new construction happening in the South right now, with the West and Midwest far behind, the Northeast struggling to even make the top four. Looking at new residential completions, May saw 1.5 million, with the other time periods that I covered just a moment ago pretty much in line with the starts chart. And you can take a look at this chart that shows completions for both single family homes and properties with 5+ units. Quote here from Doug Duncan, Senior VP and Chief Economist at Fannie Mae: "Housing prices continue to show stronger growth than what was previously expected. Housing's performance is a testimony to the strength of demographic-related demand in the face of baby boomers aging in place and Gen Xers locking in historically low rates, both of which have helped keep housing supply at historically low levels. Home builders continue to add to that supply, but years of meager home building over the past business cycle means the imbalance will likely continue for some time. We do expect housing will be supportive of the overall economy." See how the overall inventory was looking in June? Here's a map. This data is from Realtor.com. For change in inventory overall, the national average had an increase of 5.4%, with Montana boasting 15.8%. Go Montana. And Nevada and Arizona down a bit. Right here in Illinois, we're sitting at 6.7% in the positive. positive. Where are mortgage rates heading? Well, I'm not going to predict anything, but based on data from many resources being analyzed, here's what Fannie Mae and the MBA and the National Association of Realtors think. It appears that the consensus is rates will decline bit by bit in Q3 of this year through the end of 2024, hopefully beyond. We'll see. Freddie Mac is making the same projections, but they're actually a bit more positive, forecasting lower rates. That will certainly impact your buying power, but we'll have to see how inventory plays a role. If you tried buying in the latter part of 2020 and all of 2021 and the first half of 2022 when rates were super low, you may have been able to afford a home. For some, you finally had enough money to put down. But what happened? Market was crazy. Entities or individual households with cash or much larger down payments were gobbling up properties. It literally looked like a vicious game of hungry hippo. Because of that, many of you qualified and pre-approved buyers went back into the renting pool, feeling defeated. So you have to ask yourself, do you want to take a chance of buying now or waiting until rates go down? What's the use of buying at a lower rate if the price is considerably higher? And that's just doing the math. We're not even touching the emotional stress of fierce competition like we saw during the pandemic years. Look at it this way. You can either be the person with a basement full of toilet paper, or you can be the one jumping on the bandwagon and clearing up pallets at Costco and Sam's Club with the masses. With all this said, you have to make the right decision for you and your household. Buying isn't for everyone. Renting isn't for everyone. Buying right now may not be for you. I suggest you take a look at all the data and as much information as possible, including your household's needs and goals. Talk to a professional like me, somebody who knows the market. Put everything together and make the best decisions you can. It's hard, I understand that, but life is about taking chances. When it comes to buying and selling real estate, it's best to take well-informed chances and calculated risks. Now it's time to wake up! For the moment you've been waiting for. This information and data is provided by the Chicago Association of Realtors. It is for the week ending July 1st, 2023 and current as of yesterday, July 10th. From fun facts, we go to quick facts. Looking at year-over-year changes, new listings down in the detached market by 23%, attached down by 26.2%. Under contract, I think this was down from the last video we covered. Detached up by 5%, while the attached up by 6.4%. Awesome. Homes for sale, year-over-year changes in the detached market down by 20.4%, and the attached pretty much staying steady at what we've been seeing, down by 35.1%. Unpacking that a little bit more, new listings for the week of July 1st, we've wrapped up with 301 single-family detached homes, bringing us to a 3-month average of 345, down by 21.5% year-over-year, and single-family attached to 360, 3-month average of 548, down by 30.6% year-over-year. Under contract, we wrapped up the week of July 1st with 209 single-family detached homes, 3-month average of 206, by 9.8% year-over-year. Single-family attached 314, 3-month average 334, and down by 21.2% year-over-year. Inventory of homes for sale, we wrapped up the week of July 1st with 2,167 single-family detached homes, 3-month average just off by 2,166, down by 6.2% year-over-year, and single-family attached 3,363 with a 3-month average of 3,221, down by 31.1% year-over-year. So, what does all this information mean for you? Heck if I know. It depends on what's going on in your life and your household. Let's start a conversation and see how we can help you make the most informed decisions. If you like copies of any of the reports or slides we shared with you here today, feel free to reach out. You can call, text, or email. My contact info is below. Remember, love and money may come and go, but time is something we never get back. So I thank and appreciate you for spending some of your time with me today. If you want to stay on top of the market with us, be sure to like, subscribe, and hit that notification button. And think of one person who you believe would benefit from this information, and be sure to share it with them. As always, take care of yourselves and each other, and I'll catch you next time.